Today, we'll cover what happened in recent weeks. As you already know, I was away, I had not much time to trade or even look at the charts. I want to summarize the week: missed long trades, avoiding bad trades, one successful trade. I will go into detail with each trade and try to teach you how to enter, take profit, or avoid bad trades. We have so much to cover. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order. Okay, let's see what happened last week. You remember our lovely range, right? Now, as for practice, let's check out the possible missed trades. I'm gonna focus on this little part in 15 minutes because this was the area where I closed one of my trades 2 weeks ago. Now, I want you to tell me, what do you see in this chart? Can you identify imbalances? Can you identify liquidity points? Can you identify breaks and structure shifts? First of all, once the price comes into range low, you can see how it sweeps the liquidity. Then it makes this internal structure break. Now, why this break is important? It is because it is extremely powerful. Look at this candlestick. But more importantly, focus on the imbalance it leaves behind. In my opinion, the break above changes the structure fully and it creates a bullish movement. I want you to notice this imbalance again, how big and powerful it is. However, it did not work great. Why? We will get to that. Let's continue. Let's find the potential targets along the way. Are there any places that the price can move up to? The first clear target is obviously this equal high. And right above that, the great imbalance. You can also witness the downtrend liquidity above. If I was entering this position from this imbalance, where should I put my stop loss? Previous swing low or the deepest swing low? For this case, the deepest swing low. Now, no one in the world can force me to put a stop loss on an equal high or low. You should never place a stop loss around equal lows and highs. These are living price magnets. Equal lows and highs have only a single purpose: targets. Yes, they are only targets like the one above. For this trade, I would have 4 potential target points above. The clearest target is obviously the equal highs and the imbalance. I would definitely take out most partials here, but I would not close the trade. I would move my stop loss to break even and leave some amount for a runner, right up to the top liquidity above. As you can see, I would get stopped out from break even in this trade. Not much to do. I think this would have been a great long trade. Let's check the same trade with a short perspective. Once the price reaches the range high area, price deviates a lot. Price fully fills the imbalance, which is a good sign. It also clears all the liquidity inside. Now there is a little sweep right here. Okay, is this equal high or swing failure pattern, a sweep? In my opinion, this is a terrible sweep. Let's zoom in a bit and see what else we have. The price looks like shifting right here, right at the range high. You can notice the little imbalance here. If the price moved up here and reached maybe a possible trade. There's a nice imbalance here as a target as well. However, in my opinion, this would be a terrible trade. I personally hate this setup. It may look like it worked here, but the price action is quite noisy. I want strong breaks. I want big and powerful candlesticks with displacement. I want giant imbalances, clear market structure. Not much to say about this setup. If I was entering this, I would be using less than 0.5 R, maybe 0.25 R, a very low probability. Okay, let's get back to the Bitcoin and reanalyze the overall idea. I want you to notice this liquidity pool, which I was expecting to be hunted for a long time. I need you to imagine the number of long entries that were made under this support line. As you know, all social media has gone crazy in recent weeks, with Bitcoin to the moon posts. But nothing is that easy. Price requires liquidity to move in any direction. And so much liquidity below here. Imagine the number of stop-loss points placed in this area. Price kept making higher highs, as you know. However, after the last higher high, the momentum slowed down. Every asset in the world has momentum, and each momentum has an expiration date. Why? Because every asset needs buyers and sellers, an optimal balance. Nothing goes up straight forever. It needs to pull back at some point. As you can see, price pulled back to this large imbalance and reacted to this support and resistance flip area. Let's check the most recent price action and see what can be done. Can you notice the market structure here? Where the strong break happens, that changes the structure truly, right here. And the imbalance, as you can notice. Very classic support and resistance flip area. This is a setup we all traded millions of times. But why should you trade this? Because of a clear target. Check the equal highs. One of the best. And a significant downtrend liquidity. This could have been an amazing long trade opportunity in my mind. Naturally, I would expect the price to reach this giant imbalance. But as you can see, it did not. I try to teach you a real-world mindset. Otherwise, I can show you 50 hour setups with each video. Very unrealistic. For this trade, I would have two main targets. Obviously, the equal highs would be my main target. I would have closed the 50% position here. Move my stop loss to break even and leave the rest of the 50% for the imbalance above for a runner. As you can see, it would have been stopped. But no problem. I have no issue with being stopped out, a full loss or a break-even loss. I do not mind. I managed to do one trade after all those busy days. This was a high-risk trade. I just used a small amount. Once all this internal liquidity swept away, I noticed that a reverse head and shoulder pattern appeared. I noticed this much later on. With this breakout, retail traders were expected to jump to this trade. There was also this little swing failure pattern, but this was more like equal highs. This is why I assess this trade as a low probability. It had the potential to go higher as well. Let's zoom in a bit and check it out in detail. There was a significant imbalance here. I had to wait first if it was going to repeat apart and keep going higher, or react to it and fall. I also knew that this equal low formed below, a clear target with unfulfilled imbalance. This was a low probability trade that I risked less. As usual, I left the leftovers for some runners because the drop was so powerful. I did not have much time to check the charts last week. This was the summary of recent weeks. Okay folks, with this video we had a deep understanding how the liquidity works and the imbalances. Very useful